Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown on the screen now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing can be found on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely macro and newsworthy geologic updates on Crescat's activist metals positions, both the positive and the negative news across our holdings as it arises. The discussion and topics will not cover all aspects an investor should consider when deciding whether or not to invest in any of the securities that are part of our presentation. The type of investments that we discuss can carry significant risks, and whether or not to invest should be a determination made with the complete investor's suitability in mind and in connection with a professional advisor. The topics and themes we will discuss are the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our strategy in creating new economic metal deposits in viable mining jurisdictions around the world. The forward-looking business opportunities we discuss may not come to fruition or may not have a significant impact on the value of any security. These presentations should not, under any circumstances, be considered investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and this presentation has generally been put together with that level of audience sophistication in mind. Any securities discussed do not represent a full portfolio and may only represent a small percentage of any Crescat Strategies holdings. These securities may or may not be held in any Crescat managed portfolio at any time. If you enjoy our videos, please click on the like button and make sure you're subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to Merrick Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. So today we have similar format as usual. I'll go first. My presentation is rather short today because both Quentin and Tavi have pre-recorded their sessions, and they're pretty good and extensive sessions. We just got back from the PDAC conference in Toronto, so we are fresh with a lot of information after having met with most of our company's CEOs and technical people, and so there's a lot of updates that Quentin has, and Tavi's going to kind of give you a run through of his presentation that he gave at the PDAC conference. So mine will be short. Those two sessions are pre-recorded, so let's get started with mine. Recently, Zero Hedge put out this chart showing the level of U.S. gold imports. Now, a lot of you have probably heard about the the gold that's been coming over from the London Bullion Exchange and over to the COMEX vault, and there's record deliveries of gold and silver coming out of COMEX. So the question is, who is buying all this physical gold in the U.S.? It is. I can tell you that in the 30 plus years that I've been investing in gold and gold mining stocks, I've never seen anything like this, and I think it's a prelude to something much bigger that's going on personally, and it's just something really important to note. A lot of physical gold coming to the U.S. Let's go on to the next. So today, President Trump signed an executive order to establish a strategic Bitcoin reserve. This was a campaign promise. I mean, we saw him kind of promise it as Kramer was interviewing him on CNBC, and and yet, this executive order is supposed to be budget neutral, so it can't incur any. If they're going to buy Bitcoin according to this order, it can't incur any greater deficits. It has to be budget neutral. And yet there is another bill that has been pending from Senator Cynthia Lummis. That's called the Strategic Bitcoin Reserve Act, or the Bitcoin Act, I believe it's called. But what's important to note is that there is likely to be a follow-on congressional act that is going to similarly codify this strategic Bitcoin reserve. And there's something really important to understand about this act. Let's go on to the next. And that is, it is, in my opinion, and pretty clearly so, from Section 9 of Senator Lummis's Bitcoin Reserve Act, I think this act is really a red herring for gold. I think Bitcoin is a red herring for gold across the entire Trump administration, and the bigger grand agenda that we believe the administration has with respect to gold. So what is a red herring? A red herring is a false clue or a distraction from the main point. And so if Bitcoin is the red herring and gold is the main point, why does this strategic Bitcoin reserve, what does it have to do with that? And I'm just going to read this so we can all understand it here together. Section 9C of Senator Lummis's bill, and it's getting a lot of traction, and there is very likely to be this follow-on bill in the wake of this executive order. It says, not later than 100 days after the date of enactment of this act, the Federal Reserve banks shall tender all outstanding gold certificates in their custody to the Secretary, the Treasury Secretary, that is, not later than 90 days after the tender of the last such certificate. The Secretary shall issue new gold certificates to the Federal Reserve banks that reflect the fair market value price of the gold held against such certificates by the Treasury as of the date specified by the Secretary on each new gold certificate. Upon issue by the Secretary, each Federal Reserve bank that receives a new gold certificate shall remit, get that right there, shall remit the difference in cash value between the old and new gold certificates to the Treasury, to the Secretary for deposit in the general fund. That's the Treasury general account within 90 days. So what does this mean? Hidden within this Bitcoin Reserve Act is a requirement that the government does the gold mark to market. So gold currently is valued at the Fed and on the books of the U.S. Treasury at just $42.22 an ounce, something like that. It's a holdover from the Nixon days when he took us off the gold standard. And so what does this mean? There's a mandated revaluation that will create, that if we mark to market at current gold prices, would create something like an $800 billion unrealized gain on the books of the Treasury. And so, well, I mean, so what, you might say? I mean, everyone knows that gold is valued closer to $2,900 an ounce today, not $42 an ounce. So, why does this matter? Well, what would be mandated here is that the Federal Reserve shall remit the difference in this value directly to the Treasury general account, the $800 unrealized gain, will be monetized. It's like a repo of the gold. Yes, it's somewhat of a gimmick. Let's admit it. It's somewhat of a gimmick, but it's an $800 billion QE mandated as part of the Bitcoin Reserve Act. So the act basically obligates the government to buy $20 billion worth of Bitcoin over something like 4 or 5 years, $20 billion per year. And yet, hidden within this obligation to buy $20 million per year of Bitcoin is an $800 billion QE and mark-to-market of gold. I believe it sets the stage for a bigger strategy of the administration with gold, a plan to devalue the dollar relative to gold over time, and potentially as part of a bigger grand bargain, a new Bretton Woods arrangement that Treasury Secretary Bessent has talked about, and something akin to a Mar-a-Lago Accord, the bigger grand bargain that we believe the Trump administration is positioning for right now with the tariffs and all of the various aspects of Trump's negotiating strategy. I think we are going to see something like a Mar-a-Lago Accord with the world leaders coming together with President Trump, probably sometime in April, and there's a bigger play with respect to a potential establishment of longer dated swaps for longer dated treasury bonds among our allies and trading partners of existing treasuries, potentially even swaps of gold, particularly with respect to Europe and our NATO allies, and in return for these 100-year century bonds, military bonds. Treasury Secretary Scott Bessent has talked about these military bonds, and a bigger plan to devalue the dollar relative to gold. I believe this is all in the works. These are some of the signs. Bitcoin is a red herring for gold, I strongly believe, and this is why. I think you're going to see much more. So without further ado, let's get into Tavi's presentation that he just delivered at PDAC, the Prospectors and Developers Association of Canada, the biggest gold mining conference of the year around the world that we just got back from. So on to Tavi.
All right, everyone. Starting just a recording session that I did one day before this presentation going live. And so we wrote a letter recently, and I would like to go through a few charts that I think are fairly new, and also hopefully share some of our opinions. Share my screen in a second here. All right. So let's get started. I think the case for this presentation, the title really is the bear case for the US dollar. So let's get started on this. The first chart that I think is relevant to begin with is the US gold reserves as a percentage of government debt. I mean, these types of calculations had not been very relevant in terms of trading or investment decisions. If you made an investment decision with the fact that the US only holds 2% of gold reserves relative to government debt, that has been a terrible decision. But there are times in history when these types of calculations begin to matter. When you hear Scott Bessent talk about, and this is from an interview right before he actually accepted, or I should say was nominated as the Treasury Secretary for the Trump administration's second term, he mentioned very clearly that he would like to be part of a new monetary alignment globally. And I found that very interesting, and there are many angles of that view. But more importantly, this is why charts like this start to actually matter. And the calculation here is just looking at gold reserves relative to government debt. back in the 1940s or so, a little bit before the World War II, we were about 40% of all government debt outstanding was backed by gold. And then, leading up to the war, we saw a surge of money supply and also a surge of government debt, which caused this number to fall. And later on, we had the war, and after the war, and then we hit 1970s. The 1970s period was another time when not only gold prices increased, but really what happened at that time was the fact that we saw a 17% again increase of this number. Today, given the fact of how much government debt has grown relative to the gold price increasing, that number has not gone anywhere, which is remarkable. So we're now at a 2%. And by the way, I just want to be very clear, none of these numbers are hypothetical numbers or price targets of where gold should be. It's just a study of where, throughout history, we've seen if we ever go back to those gold reserves relative to government debt levels, what would that imply gold prices today? And if we go back to the 17% number, clearly we're about $24,000 an ounce. Go back to the 40% level, which is a more extreme situation, we're back to $55,000 an ounce. Now, I may argue that this is not as extreme, perhaps, because of the white line of where you're looking at the government debt to GDP, where it's higher than the World War II levels. And so I guess if we're going back to a disciplinary age of fiscal and monetary policy, I guess it would be plausible that we would get it back to some of these levels in terms of reserves relative to government debt. Another thing that I think it's remarkable, actually, in terms of research, is you've got two lines here. The blue line is international central banks, and then the yellow line and the first panel of this chart, you're looking at U.S. gold reserves, so separated the two. Notice in 1957 or so, the U.S. had more reserves than the entire world combined. And then I pointed out at the end of the gold standard in 1971, what exactly happened during that period. We didn't see really international central banks buying gold. In fact, we saw actually selling of gold after that era. Same thing happened with the U.S. And then things sort of, stabilize in terms of the U.S. And we haven't seen a change in policy, at least that we're aware of or reportedly aware of. And so the yellow line is today at its lowest level in 90 years. And the blue line is rising. It's been rising since the global financial crisis, and it's now at its highest level in 49 years. I mean, this is a real change in policy from the rest of the world versus the U.S. And you can see down below in the second panel of this chart, the percentage of U.S. relative to the overall gold reserves globally. And we used to be about 53%. Now we're back to close to 20%. And I noted, I guess one of the points I make in this chart is that the U.S. has opted out of the global gold buying spree. And I really mean it. I think that we're on the verge of seeing some big changes in policies that could surprise a lot of people. Now, one of those things that don't happen in 50, 70 years, and then you see a policy change. That's where I believe we're on the verge of. Now, a few things have helped the dollar, and also I would say also cause issues in terms of the extreme of, I just showed you that we're at a 90-year low of gold reserves. At the same time, when you go back to the global financial crisis, which was a time when most central banks started to buy gold outside of the U.S., we also saw something called, what a lot of people call, American exceptionalism. We saw a period where U.S. equities have done very well. I call it fiscal irresponsibility, because clearly with the data, if you looked at in average, the U.S. has spent a lot more than other countries when it comes to government spending relative to GDP. And this is relevant because the U.S. is holding the reserve currency status with the dollar, allowed them to actually use a less disciplinary approach relative to the rest of the world. But those things, they can only last for so long, and therefore why we're seeing a push towards a change in that direction. The thing is, when you have government spending to that degree, it creates an engine of growth in the economy. And therefore, why you're seeing in this chart, the valuation of U.S. equities at very extreme levels. So you're looking at price to book, and I have it separated by countries, and you have the Nikkei, the German stock market, the French stock market, the Brazilian Ibovespa, the Korean stock exchange, and all these other. And I have all this the pack down below, what I call the rest of the world and the U.S. Clearly, there's a big divergence, a disparity of multiples that I believe is being caused by one agent, which has been not only technology advancements, but really, in my view, much more intensified by the fact that we've seen so much government spending in the U.S. And so it becomes a question when you back in the days, you used to have all these list of pillars that have been supporting that red line. You're looking at the chart. It used to be NIRP, near zero interest rate policies. You used to have even at some point negative real rates for a very long time in the U.S. And then we had an expansion of the monetary base, a large increase of money supply domestically and globally. So all these things have caused the red line to rise substantially. And today we're kind of, all these different pillars have been taken out. So, first was interest rates. We're not seeing rates, at those levels that used to be to justify multiples at the levels that they are currently. We're not seeing the Fed really print money as much as we used to see before. In fact, we're seeing the balance sheet of the Federal Reserve to shrink. You can look at the global central bank assets just to see liquidity from a broader standpoint. It's also falling. Money supply has been falling as well, globally especially, and mostly a function of the US dollar, just to be clear. And, I believe that the last engine or the last pillar that has been holding up this red line has been government spending. Now we're talking about DOGE. We've been talking about all sorts of policies to reduce government spending substantially. I question if the red line should be where it is. I don't think it should be. So, when you think about what we call the rebalancing, the global rebalancing in this letter is really because of the world, has been essentially been neglected, the rest of the world relative to the U.S., which has the so-called milkshake theory has sucked all of the capital outside of the world. And as you can see in this chart very clearly today, MSCI World Weight has the U.S. at about 73%. Rest of the world are all single digits, as you can see. So Japan, which is the highest at 6%, is more the U.S. is more than 10 times the weight of the second in place. So these are pretty extreme numbers that I think are completely, folks try to justify these types of imbalances. But, what is, how do you even come up with the thesis to go from 73 to 75? I mean, it just seems, I call this asymmetry. I mean, there is no name for it outside of asymmetry when it comes to investing outside of the U.S. And I believe that this all comes down to the dollar, and this is why this presentation is so focused on the dollar. When I looked at this chart, and I've showed this chart before, to me, it's the most, if I was a policymaker, and I do think they are aware of this chart in terms of not coming from me, but really the administration actually focused on this specifically, has to do with, the main imbalance we have. It's not the debt to GDP level, but really how much we're spending to service the debt yearly. And in this chart, you can see the U.S. is spending close to 5% of GDP. The second economy, which would be Greece, is almost half lower than the U.S. And so, and a lot of other pretty large economies are substantially lower than the U.S. as well. So you can see that there's a greater sense of urgency for the U.S. to lower rates. And this is sort of a chicken and egg question, because you can work on reducing fiscal spending in order to cause interest rates to fall, which is what Scott Bessent has been talking about. But the other way around this would be clearly, if you just bring interest rates lower, it would actually cause one of the largest buckets of government spending in terms of wasteful would be the interest payment to GDP that would go away or at least be reduced substantially. The U.S. needs to bring it down, this number, in my view, at least in half. And so, there's a lot of room for changes in interest rates from here that, in my view, would have an impact on the dollar. And so what is the usual outcome of austerity combined with lower rates? And one thing that I learned is especially coming from folks like Druckenmiller, by no means this is a formula you should follow, and it's not certainty or anything along those lines. But it's something that is struck to me back in the 90s when those guys, Paul Tudor Jones and Stanley Druckenmiller, used to talk about how strong government spending alongside with strong monetary policy, or I should say tight monetary policy, tends to cause the dollar to rise. We have precisely the opposite of that combination. We have austerity combined with lower rates. One causing the other. Again, the chicken and egg question. The lower rates causes austerity, as at the same time as Musk is in a way talking about Doge and all that, but really masks the idea of lowering rates itself that then causes the government spending again to be reduced. The ultimate formula, in my view, that causes a weaker dollar. And if you listen to Besant and other folks that have been talking about this drop in 10-year yields, the media has been all over this. There has been no shortage of coverage on the 10-year yield. What has been shortage of coverage has been on the dollar, but the two has been trading quite closely with each other, as you can see in this chart. The blue line has been falling, and the white line has been falling. So the dollar has been actually declining relative to other currencies more recently. In fact, this chart's slightly old. The white line has been collapsing more recently as well. We've had in the last 2 days, we had the two largest 2-day drops. I'm sorry, the largest 2-day drop in the DXY index in 2 years, in over 2 years. You go back in history, these kind of levels of two-day declines are not usual. And when we see those, they tend to cause these downward trends as well. So I think this is extremely meaningful, and I'll explain why in a minute. When you look back in history, this might be one of the most important charts of this whole presentation. This is a way to measure the valuation of the US dollar. It's a real trade-weighted index that the Fed actually calculates in R-Growth Infinity, provided the data going back to the 40s, before that era, because I can only go back to the 1940s on the data that I have access to. So I thank them for providing this data, and and also for their approval for me to use this. But if you look at this chart, it's also, I think, remarkable. You can see two peaks in history outside of today. First, and the first thing that comes to mind is that we're extremely overvalued historically. Going back 100 years, over 100 years, we've only seen 2 other times that the dollar was this overvalued. It's funny to me when I hear people talk about the dollar is the cleanest of all dirty shirts with so much conviction. It's almost like, okay, you've been reporting what just happened in the last 5 to 7, 10 years. That's not investing. Investing, in my view, is understanding what's likely to happen, not just explaining what just happened in the past. And so I'm trying to use those lenses, because when I see something have such a large movement like we're seeing now, I believe it's time to start, growing conviction in a view that I've been growing in the last, call it, 5 to 6 months. And I think it's starting to play out in a way that could be very meaningful for markets. Those 2 peaks that you're seeing in the screen, one of them was 1985, where we saw a coordinated act across central banks to reduce the valuation of the dollar. That inflated the Japanese market, real estate market, equity market. We saw bubbles in emerging markets. So the fall of the dollar it really causes a rebalancing. The people sell the dollar and start buying the rest of the world. And I think we're going to see something similar. Now, you go back to the 1930s, which to me is even more interesting, is because we were in the middle of a global recession. We were in the middle of the global depression, I should say. And 1929 markets peaked, and then 1931 came along. 1931 was a period where the whole market was, in this meltdown, stage, and a few economies like the UK, Japan, Canada, Germany, Austria, pretty large economies of that time, decided to break their gold standard domestically. So immediately on the back of those policy changes, we saw the dollar surge. Makes sense. If those guys lost completely their discipline, then the dollar began to surge. Then back in the 1933, there was some attempt to coordinate things across central banks to try to revitalize the global economy and come up with policies that would potentially especially on the trades front, and maybe even in the monetary side, trying to really revitalize the global economy. But guess what? Roosevelt at that time came out of that London meeting, was a meeting in London across most monetary authorities and fiscal authorities of the world, and basically gave up on on that cooperation globally. And right when he came back to the U.S., he decided to devalue the dollar versus gold, and that was basically what caused the dollar to peak as well. And pretty much marked the end of the that global financial crisis of that time. And so I think there's some similarities with today in that front. Not that we're in a Great Depression, but the fact that the global economy outside of the U.S. has been pretty stagnant. And then you can see that, not to go back, but look at this chart. This chart, I think, is a good example of that. You can see the rest of the world has been stagnant, and then the red line is the U.S., which has been ahead of everybody else. And so you've had this already an attempt to, or I should say, most currencies outside of the U.S. dollar have already devalued substantially. The Japanese yen, the euro, the Canadian dollar, the Brazilian real. I mean, I was just looking at real estate in Brazil. It's down 50% from its peak, mostly because of the dollar. And it's just one example. You can look at a lot of other countries that are facing the same issue. And so you start to look at this, it makes sense that we're at a peak. Now, the question is, can we continue to have that? And we know Trump's, views about the dollar, or at least from his first administration. We know that there are some hesitations of, speaking openly about devaluing the dollar. It makes a ton of sense to me that they shouldn't be directly targeting the dollar. But in my view, what we're about to see is that this policy that is so targeted on interest rates is really hiding a bigger target, in my view, which is also lowering the dollar. So when you think about, okay, what's been causing the dollar, if the dollar starts to move and starts to actually change directions, which is the blue line now that you're looking at, that's the dollar. And then you have the other chart is basically commodities to equity ratio. So it's a index of commodities, and then you look at relative to the S&P 500. I've used this chart many times, and try to I think it's one of the most important lines or charts or measurements that an investor should be focused. It's what brought me the conviction to invest in commodities. Most people that look at this chart will usually say the following, say, well, I've been looking at this chart for many years and it never works. But the big question is, why it hasn't worked? And the reason's right in your face, right here in the blue line. And the blue line has not turned. So if the dollar keeps going higher, it makes no sense that the yellow line, the white line, is going to turn as well. So we're now at a change here. There is a clear push to reduce the valuation of the blue line. So if that's the view, then what does that do to the white line? I think we're in the beginning of, again, a rebalancing, but also what I view to be a secular bull market for a lot of hard assets. And so it's not just gold. And I think why I'm so focused on, I think gold is the green light for a lot of its derivatives that have lagged substantially. And another thing that is important when you take a look at that chart, it makes you think about as well about the equity markets in the U.S. have been very expensive. You can see here is a great example is looking at the CAPE ratio, the cyclically adjusted PE ratio by Robert Shiller from Yale University. And this is a great way to sort of step back and see valuations. And you can see here that the U.S. is by far the most expensive. There are other economies like India that actually surprisingly are pretty high in terms of valuations, although they do have a lot of growth. And so maybe there's ways to justify that. But this is why I tend to focus more in the far right of this chart, where you have especially countries like Argentina, Brazil, you can see South Korea, and some other economies that I think look a lot more. Even European economies have had valuation of the U.S. Now, what is remarkable is if you take the U.S., which is already very concentrated, as we all know, with mega caps, and then you take that U.S. stocks alone, they have a CAPE ratio of almost 60. And that's insanely expensive, because if you do an empirical analysis of when you reach those valuations and what's the return after that, you tend to see pretty diminished returns over the next 10 years, if not very negative, by the way. I should say it's actually historically has been very, very negative. But I don't, I don't want to also paint a color of being extreme. I think it's extremely bearish. I've never seen concentration, end well in markets. We've seen a few times, but arguably this is probably one of the most concentrated markets we've seen in history. What are other derivatives? And you can see here in this chart, points you to emerging markets. Okay, well, look at gold and emerging markets. They have a pretty clear correlation. So yellow line is gold, obviously. Blue line is emerging markets. And you can see that emerging markets, all the way back to 2007 or so, the global financial crisis, they have been going sideways. It's been in a major, major consolidation. And what I like about charts like this is that people have completely ignored this blue line. They think it will never go up again. And they think majority of folks have lost faith on things like emerging markets, the mining industry, silver, just because they haven't moved in a very long time. Now, I like to, I wouldn't say the word necessarily bet in history, but really rely on history. And when I looked at this chart, clearly these types of instruments, emerging markets, silver, mining stocks, they tend to be the high beta versions of gold. And so would it shock me if we see that rebalancing of the dollar causing this blue line to actually go a lot higher? No, it wouldn't shock me at all. And in fact, that's one of my main views. I am extremely bullish emerging markets. I think when you have the two main issues for the blue line are usually emerging markets tend to suffer in periods when the dollar is strong, and then you also have yields rising. And I think we're in a period where the U.S. has one big priority, which is capping those two things. And as we see that occurring, I believe that the blue line is going to benefit tremendously, and it's going to be a green light for emerging markets overall, in my view. Mining stocks, another thing that should be beneficiating from this environment as well. Something that people don't talk a lot about, but the cost structure for mining, maybe we're entering what I call the golden age of mining. What a wonderful environment to be producing metals when gold prices are almost double what most of these companies are paying to produce. And I know some people like to say, "Oh, Tavi, you got to add a few CapEx." It's not much. There's still, increase in the bottom line of these companies. And to me, what it means is in the following charts, I guess. Well, you can see, this is another example, the gold to oil ratio, second largest level in history. We're seeing gold rising substantially. Oil prices actually falling. It's in the 60s, which is a little shocking to me too. And I'm not going to lie. I have given my views on hard assets and commodities. It's something I've been wrong here recently. And I actually think it's an opportunity as well, and especially the producers of oil. But nonetheless, that this ratio has been so high that it creates incredible margins. Maybe even Quentin can comment on some potential impacts in mining companies when you have gold to oil ratios at those levels. Majority of that, from my research, usually comes from open pit projects that tend to have a pretty high energy cost. And so I would suspect that that would also benefit those companies. Now, the white line now is showing that profitability. It's a cash flow per share estimate, which explains a lot recently why mining stocks have been underperforming gold, is because their bottom line has not improved. Now, notice the recent increase that we're seeing. Notice that jump from pretty mediocre levels, like around that, pretty close to where the share prices are trading. And then recently we had a jump in prices or in cash flow per share estimate, which is, and by the way, the realized cash flow also saw a major jump. Now I'm happy to show that too. But you can see here, we're now almost at all-time highs, and the share price of these companies are all 50% from their prior highs. Now, each person will have their own interpretation of this. I'll give you my interpretation. I think there is an opportunity for a major catch-up, and I'm laser focused in these things, because I do think we're seeing something very special for the mining industry. Now, more importantly, if you recall, and maybe a little bit self-promotional here in the sense where Crescat has been deploying capital. I mean, we deploy a lot of capital in exploration stocks, so I want to get that out of the way first and foremost. But it's also important to put real research out there when it comes to understanding stocks and how things usually tend to perform in different times. Exploration stocks tend to have really high risk, but also, a lot of times provide most of the big returns in the industry. Majority of the billionaires in this industry made their money in exploration stocks. So a lot of them, purchase shares of companies at early stages that end up finding major discoveries. And then when you catch that cycle of mining, you tend to see pretty large increases in share prices of these types of, high risk names. Again, cycle needs to be right. If you're wrong about it, those are the things that also fall the most. Now, what is interesting about this is that when you start to see the seniors making money, which is what's been happening, this is cash flow as well in yellow. You can see that there's a correlation between that and explorers. Immediately, the market starts thinking, wait a second, these guys are going to deploy capital into the blue line. But this time around, I would say that it's even more relevant, because you also have a time when most of these companies have not replenished their reserves in a very long time. The quality of their reserves have been deteriorating quite substantially. So there is a need for them to actually pursue even more M&A. And I do think we're starting to see some of those M&A transactions. Majority of these transactions have been happening, I would say, most between seniors or mid-tiers and seniors. We're not yet seeing the money flow down to the bottom of the industry. In my view, it's a matter of time. And if I would point out, I would say that, again, it's my opinion, but I do think our time has come in terms of investing in the space and seeing that blue line finally starting to move. Another thing, which is my last chart, that I think it's incredibly bullish, and I should not dismiss in this whole presentation, is silver. And it's hard to ignore what's been happening with silver prices recently. Silver has been incredibly bullish types of behavior. When gold prices fall 1.5%, you see silver acting very well. When gold is flattish, you see silver actually starting to rise. And silver is now flirting with 33 to 35 level dollars an ounce. And what is, again, very interesting about this whole thing is that the gold to silver ratio is still at 90. And so that gives you sort of a sense of, what it could be ahead of us, meaning a 90 ratio of gold to silver ratio. For those who don't know, it's one of the largest levels in history. And usually you tend to see at least half of that ratio. In bull markets, it could be even a 20 level or so, which would imply crazy prices on silver, obviously. But my point is, even when you adjust silver relative to money supply, which was you looking at the screen, I believe we're at the very, very early stages of, a pretty significant, upward trend that I think will be the case in the following years. And so this is why I focus so much on this. I guess is a good thing. that Crescat has as well a large position or the largest institutional holder of St. Cristobal, and which is the fourth largest silver mine in the world today. So it's really exciting to have that leverage to silver, in my opinion. But not only that, I think there's plenty other instruments that not only we have invested, but other folks have invested too, that are yet to reflect a period of a very bullish prices for silver. Again, I just want to make sure these are not hypothetical views. It's just my opinion about my analysis of looking at the data historically, fundamental analysis of these companies, and where my macro opinion is growing conviction on all these things. But pretty much, I would say that everything now is evolving through this U.S. dollar view as well, which I think it's one of the most important things happening in the market. All right, I think this is it for my presentation. I am gonna stop now and let you guys continue. I think Quentin will be continuing now. Thank you very much. Take care.
Hello, everyone. This is our update for Friday, March 7th. We're coming in hot off of the tails of PDAC. And as normal at PDAC, this is where you usually get the scuttlebutt. And I didn't quite understand what scuttlebutt was. I looked it up this morning because I thought, I wonder where the word comes from. Turns out a scuttlebutt is a barrel of water that the old timers would have used on these sailing ships to go around the world. They would have put fresh water in the scuttlebutt. And because this was the main source of fresh water on the ship, this is where everybody would congregate. So this is kind of like the 1600s version of a water cooler in an office. But this is where people congregated. And the term for that barrel is a scuttlebutt. Quite interesting. And then I found out even more interesting news when I went through Wikipedia. Then they have this link and it says, a bunghole is a hole that's tapped into the side of the barrel to access the water. And I'm thinking, how many chances am I going to get to use the word bunghole on a live video? So here it is, folks. Now you have the history. Anyway, we're going to talk about the scuttlebutt first of all. Okay, let's go to the next slide. Look, we spent a fair bit of time going around, and we kind of decided to parcel out the workload between us. So Kevin and Tavi had independent meetings of myself. I went around and talked to quite a few groups. I even attended the MIF conference on Friday and Saturday, which gave me some interaction with some retail investors. And, I got to see a lot of people. I had meetings with retail investors, with brokers, with bankers, obviously in the M&A space that's starting to heat up now. And I also had a lot of meetings with major mining companies about various companies that, just popped up. They wanted to know more. Some were, I'm a director of, some were companies they know that, for instance, Crescat is a shareholder. So they wanted to find out more about our intent, our views on certain companies. And I thought I would just touch, I put this slide together because this slide summarizes, at least from my experience, the meetings that I had in Toronto. Okay, so the names that you see on here, I had either meetings or I had discussions with various people. Some of these were just people coming up and asking me, what do you think of this company? And, I had discussions with many people around this. So I'm going to kind of plow into this and just give a couple of comments about each one of these, because I do think they've caught people's attention. I know this list isn't a thorough list of all of the companies that we've talked about in the past, but it does give you a picture of, a little snapshot of some of the scuttlebutt, as you will, of my encounters this past week. So look, Silver 47 came up several times. They were at the MIF conference, and I think that the overall gist, I talked to several retail investors, and I even talked to one geologist who thinks this is a very exciting project. It's a geologist for a silver company, and they're looking around at big silver, stories out there for potential future acquisition, things like this. But overall, very excited. I think the thing that really caught people's attention was Silver 47 has raised a fair bit of money here recently. And it should be enough to give them a pretty robust drill program this coming season. So I think in terms of drill stories, they are now set to be one of the more exciting drill stories in this coming year. Gary told me that they plan to do fairly aggressive step outs, resource growth, we'll call it drilling, around the existing deposits at West Thunder Flats and Dry Creek, but they are also going to test a number of new targets. We know that the property has a lot of new targets, and they're going to test some of the highest quality targets. So exciting drill story coming up. Alpha, a lot of, we'll call it brokers or institutional investors, I think is the best way to put it, approached me about Alpha. There does seem to be a lot of excitement. I think there's a lot of folks that see Aberna being an exciting gold play, Aberna as an exciting gold play, but the name Anagulu popped up again here recently in discussions. Anagulu, if you remember, is the first project that we invested in. Like the thesis, our original thesis was around Anagulu. And it sounds like Alpha has done some more recent work that suggests Anagulu, the target there might be plunging off to the north from where they drilled previously. This is very interesting because basically it says there is a very good shot the company could go back in and make further discovery. It was always one of those stories where it's like, bam, they're hitting some good stuff, and then they couldn't quite figure out where it was going. Maybe they got their technical ducks in a row here, and they will chase it in said right direction and make that big discovery. It's a project that reminds me a lot of some of the big porphyry copper golds over across the Red Sea over in Saudi Arabia or the Arabian Peninsula. So very exciting there. Western Alaska came up. One of the most respected geologists on my list came up to me, said that is the most exciting story he saw at the entire convention. I talked to the guys at Western Alaska. I spoke with Kit for probably 45 minutes. The hits they had last year, no big intercepts, but I think what they learned is that there is clear evidence that there's a linking system between Illinois Creek and the Water Pump Creek area. I think they're seeing those high grades, even though they're narrow intervals, they see those high grades as being a clear indication the system goes through there. And I think they also understand now that the fault that appears to bound Water Pump Creek on the south side probably has normal displacement, which means that the rock has simply dropped down. Originally, they thought it had shifted. It's not the case. So they are going to go back in and test that hypothesis. If they do, if they hit the rest of Water Pump Creek, in effect, continue making discovery along that trend, I think that could be a really exciting story this year. Inflection came up time and time again with a number of investors, both retail, but also a lot of institutional people that I spoke with, because people recognize hole 23, which I spoke about a few weeks ago, is truly a near source hole. In other words, it appears that the copper gold, strongly anomalous copper gold, they hit in that is probably near a porphyry copper gold system, something like Cadia. And they simply need to do more drilling. And Alistair told me flat out that they are drilling again like right now, they're starting drilling again. And hopefully we'll see, wake up one morning and we see, wow, they've found the next Cadia. So exciting there. I'm going to kind of migrate around here. Apologize, but I'm bouncing around a bit. But Barksdale, interestingly, a major mining company came up to me and saw our news, and I'm a director. Okay, so they saw our news from the drill hole last year. They said, wow, it looks like you were getting into something, a near miss, basically. And I said, absolutely. It's just interesting to see, really smart people in a major mining company take note of that. And I think it speaks volumes about the fact that we likely do have a discovery. We just need to get back in there and drill and that's going to require money, of course. But I won't go off in the weeds there. I'll just say that it's caught people's attention. Even the guys next door to us, the big mining company next door, noted that we had some really interesting rocks that we hit last year. So next, Newfound. A lot of talk about Newfound and where it's headed. People see these new members coming into the company, these new management and directors coming into the company. It's quite clear that they're heading into a direction of development and then production. So I think we're going to see the story shift from an exploration story more into a development and hopefully a production story. And what that means, I think that one broker summed it up quite well when I spoke with him. He said that likely means that the way the company is valued, rather as an exploration play, will now be all about the kind of potential cash flow it could generate, but also then once it gets into production, the cash flow. And as we know, very high grade deposit. So, hopefully the new team members can demonstrate that this can make a fantastic mine and unlock a huge amount of value. Lots of talk around Newfound, lots of talk. Many people came up to me and said, do you really think Altamira is a reduced intrusive system, i.e., a Proterozoic, an old porphyry complex? And I said, absolutely, absolutely. They said this is probably one of the more interesting stories that they've seen in Brazil here recently, and I think Brazil is catching more and more attention. I say that because there's other companies that have made some recent discoveries, but you also have mines like Tocantinzinho recently been built, and people can see that Brazil is open for business. It's a good jurisdiction to build gold mines. So several people came up to me about Altamira and quite excited by the fact they have at least 5 porphyries across the property. All right, BCM. I spoke to several major mining companies about BCM. I spoke to Sergey. Sergey was there, in fact, the CEO, and a number of investors. And, the people are compelled that they have a discovery. Hole number 8, which was drilled nearly 2 years ago now, is clearly a discovery hole. It's like 155 meters of 0.8% copper equivalent, something thereabouts. And a lot of major mining companies recognize that. And I'm telling you right now, there is an absolute rush into that part of the Great Basin looking for the next big porphyry system. And I think BCM, even though it's been beat to death and lacks money at the present, I think it is catching the attention of a lot of really smart people, and it is one of the most exciting stories that I spoke about or I talked with people about at PDAC this year. Okay, I'm going to kind of continue jumping, so I apologize. I'm going to move over to Juggernaut. I did get to look at the veins, the samples that they collected, very high-grade samples from this Big One project that they've just picked up. And to me, even though it's way up in the north end of the Golden Triangle, they do look a lot like the style of veins that you see way down, at the southern end of the Golden Triangle at Goliath. In other words, are high temperature but high precious metal veins, and they've got that gold silver flavor. They got a little bit of base metal, zinc and copper and stuff. And to me, it looks like they're on to a similar scale system. I talked to the company about what they're going to do this season. I think they're going to hit it hard, do some mapping, maybe do sawed channel samples like they did way back in 2020, I think it was, for Goliath. And then they'll follow up with, who knows, maybe they'll do some drilling late season. But once they have that solid data where they can, drill with confidence. Now, a lot of people came up to me about SK, and they asked about the high grades that the 2 geologists that we contracted last year found down in the southern part of the property. There were a number of samples. If you recall, I spoke about them recently, but there were a number of samples that came back in the 10 or tens of grams of gold, even several 100+ grams gold samples. And they were in high, in sheeted quartz veins that, quite frankly, look a heck of a lot like Goliath, to be blunt. But they also look like a lot of the veins apparently they saw over at Brucejack in the early days. And a lot of people came up to me asking, do we think that could be another Brucejack? My answer has universally been, we need to do more work, but we're going to do that work. Okay, we put out a news release, and I am a director. We put out a news release here recently outlining what we would like to do on the ground. And I think if we do enough prospecting and mapping, that we can develop a drill target. Again, maybe late season, we decide to go drill. I don't know yet, but we need to do a little bit more science, collect more data. But it is very exciting what we're seeing, given that it shows similarities to the veining at Brucejack. Let's see, next one on the list. Look, Irving Resources. I think people are finally catching on. Talked to a large number of people about the fact that we do have JX Mining on our portfolio, effectively, of partners. We've got Newmont, of course, and Sumitomo Corporation. We are the best positioned junior explorer in Japan. We're the most advanced by far, and seeing JX, which is the largest mining house in Japan, basically say, hey, we're going to help you guys make a smelter flux operation. The business model that we've been pursuing at Omu is just thrilling. And I think people are finally starting to catch on to that. There's also a lot of interest and excitement around the drilling that we're doing down at Yamagano. That's with Newmont and Sumitomo Corporation. And if we were to be so fortunate as to find a Hishikari type discovery, I mean, that is really a huge catalyst that could drive the stock from its current levels way higher potentially. Okay, so there's a lot of good stuff happening in Irving. Sometimes things move slow, but sometimes they coalesce and come together, and all of a sudden a huge amount of value can be created very quickly. That's why people look at junior mining. It's that potential for creating value out of nothing, effectively. El Oro was an interesting topic because there's so many people. This includes bankers and institutional investors, M&A types. There were so many people that wanted to discuss El Oro because they can see that if the company does its infill work, in other words, if it drills the infill holes in that core area and it comes up with a sizable resource, that this could be an absolute killer story that could be developed, a la Apex Silver back in the day. So, wind back the clock 25 years, 20 years, whatever. Apex Silver was the big silver story in the silver space there in the early 2000s, mid 2000s, and it got capitalized. They got capital because they were such an attractive proposition, and they built the San Cristobal mine, which we, Crescat being a large shareholder, currently own. So we are the owners of that. But that kind of pattern could repeat here. I think there's a lot of interest from bankers to see the company get back on its legs and get that infill drilling done and put the company on a track to moving towards a development story where they build a big silver mine like we have at San Cristobal. Okay, so that was interesting. Now, I'm going to go up to the top. I'm going to skip that silver bowl for just a second. Like Red Canyon Resources. Funny enough, I was coming into the office of a major mining company, and guess who's coming out? Red Canyon. Okay, so don't want to disclose too much, and there was nothing material here to talk about. I'm just saying they had some good meetings, it appears, and there were a lot of people that asked me what I thought of Red Canyon and the discovery they have at Kendall. And look, when you hit hundreds of meters of 0.1 copper, point whatever 1x copper like that, you're not too far away from a potential discovery. Okay, potential, we don't know. Okay, but it certainly warrants more drilling. And I told people that repeatedly. I think going back and seeing a few more holes at Kendall, probably to the southish from where they drilled, is certainly warranted. And given it's really a one-off in terms of the porphyry picture in BC. In other words, it's kind of not in the traditional area that people have looked for porphyries, and it's not a porphyry of a typical age of BC porphyries. This actually is quite an exciting story. I mean, it could be something, one of these unicorn discoveries that really wakes the market up. All right, so now I'm going to go to silver. Now, probably nobody watching our videos knows what Silverbow is. It's a private company, but Crescat's been involved for a number of years now. And I'm telling you, this is probably making the most noise in the silver space, certainly. of anything out there right now. Now, what is it? Well, this is a company. It does have a website now. I am a director, for full disclosure, and it's a company that controls the west half of the Butte Mining District in Montana. Butte was one of the biggest copper porphyry mines in the United States, one of the major sources of copper in the United States for many years. And around the porphyry, there's a large number of veins that have come off of the porphyry and contain, significant quantities of base metals. And we have probably one of the biggest endowments of silver equivalent, in vein form of any silver company out there. And this story, watch this space. Okay, it's going to likely move towards a public listing later this year, and we have one of the best CEOs in place, Mr. Travis Nagel, who's a Colorado resident here, but he cut his teeth in Montana. He went to Montana Tech, which is at Butte, and he knows the people, he knows the project, he knows the place very well. He knows how to advance it to a development story. It's a very exciting and high grade vein story. All right, I'm going to just say this flat out. Hannon Metals was the number one topic. Most people, didn't see the news release. At least we'll say the general retail probably didn't see the news release, but the people that did see it are institutions and big mining companies. Almost all of the geologists and institutional investors I know saw those trench results from Provisto, and they got it. Okay, they understand what that means. This is a big dang discovery. It's going to take a while to get the permits, but I did get a chance to talk to their geologist, Lars. Lars, I've known for a few years now, and he is one smart cookie. Okay, he's very smart. He's very smart about alkaline gold. He actually has done his homework and knows a lot about these types of systems, and he is quite comfortable in this space. I did introduce Lars to some alkaline gold experts who happen to be at PDAC, and they've all kind of formed a little clique and are now comparing notes. But I guess the takeaway from Hannon is it's a story that's going to require a little patience, but I think it could be it's like the next Snowline or something like that. I think it could be a very, very big story with some luck. Okay, everything, it's dependent on what the exploration results tell us, but to me, Hannon looks like a big darn story. All right, Sitka. A lot of people are stoked about Sitka. Yep, they're drilling. The commitment they've made to drill 30,000 meters has got a lot of people fired up. I think there's a lot of anticipation around this story. I think 2025, with luck and good results, we're going to see Sitka really get some traction, especially with a stronger and stronger gold market. I think Sitka is going to be a very, very attractive story. It is road accessible. I think that's a big, big plus that several people mentioned. It's not too far from Banyan too. And by the way, I didn't put Banyan on here, but I had a good catch up with Tara, and I talked to her about the high grade that they hit here recently. I am super interested in that because that apparently that high grade follows a dike, an east-west dike that crosses the property. And in my view, the dike, like she showed me some photos, it looks like one of these reduced intrusive, style dikes. I'm going to do a little more digging. In fact, I'm going up to BC the Yukon sometime this summer, probably early July. And I'm going to make a point of going to both places. Okay, Sitka and Banyan. All right, Kingfisher. I didn't connect directly with Dustin, but I talked to a lot of people that are following this story, and the fact that Dustin seems to have, conglomerated this huge land position in the Northern Golden Triangle, in one of the most depressed markets in mining history, and he's done an exceptional job of putting together a project that's going to have, I think, a lot of value to offer. Okay, it's an exploration play, but we're talking about alkaline gold systems, alkaline porphyry, copper gold systems that are similar to major mines in the area. For instance, Red Chris is nearby. The Galore Creek deposit is nearby. Shaft Creek is nearby. Like, this is in elephant country. And I think he's got something big here, and it's starting to generate some attention. All right, I'm going to go way up to the upper right-hand corner there, Condor. I think I had 3 meetings with large companies that have caught the Rio Bravo results have caught people's attention. Okay, it's historic data that came from drilling that Vale did, but man, I'm telling you, this project is copper. It's reasonably accessible. In other words, it's lower altitude in Peru. That's important, and it's really caught the attention of a lot of big companies. So I think Condor, just from Rio Bravo, I think that's going to be a big important project for us. Not to say that the permitting at Pucamayao and drilling that again isn't important, but I think we are going to see some value out of Rio Bravo this year. Blue Lagoon, this is an interesting one because everybody was so doubtful they could get their permit in BC. But lo and behold, they got it. They got an operating permit. This is a little company that's going to but start mining the Dome veins again, the very high grade resource they have. It's around 220,000 ounces, I think, of very high grade. They're going to process it at the mill nearby at Nicola Mining. And the scuttlebutt, like, to be frank, the scuttlebutt is the companies should combine. That's the view of most everybody I talked to at the show, is that the 2 companies should bolt together and create just an unbelievably compelling gold production story. It's kind of cowboy scale, but it's a nice, good cash flowing scenario that could be had. Okay, it's very high grade. Anyway, that was the news from the people I spoke with. Everybody's view is the 2 companies should join together. Magotes, a lot of people are watching this one. Big companies too. I talked to at least 2 geologists from large companies. Given that Filo is right next door and that Magotes has picked up this new ground recently that may have the extension of the Filo system, basically the Aurora trend comes straight onto this new ground. Not that the previous ground didn't have it, but this is exciting stuff. Okay, so there's some big companies that are definitely starting to take note, but also there are a lot of retail investors came up and said, we think Magotes is going to be big this year. I said, look, it might take a little bit longer than that, maybe a year or 2, but they are definitely in the right neighborhood. They're next to an acquisition that topped $4 billion. Okay, and they've got the same geology. I spoke with the company. I spoke with the geologist behind the company, and I think they are on the track, say, in the next 12 to 24 months to do big things. Okay, I'm very hopeful they'll make discoveries. Rakla. Okay, I was walking down the aisle in the main floor there, and Rakla was on that particular aisle, and people were coming at me as I was walking down the aisle. And, these are people that knew me or just kind of recognized me and said, Rakla looks like a no-brainer. And I said, yes, I agree. I think the new target looks like a no-brainer, but it was just nice to see, I think 3 people stopped me in the 100 yards. I had to walk to get to the Rakla area, the booth. They stopped me and said they can see the prize there. And I said, yes, absolutely. This is going to be an exciting year for the company. I really am hopeful they can make this discovery this year. PJX. I met with John Keating. We also talked with a number of institutional investors that are looking at this story. I think their land package, but this Sullivan type target is really starting to resonate, even with the big company that I happen to talk to. I think that people are taking note. They recognize they didn't quite get the drill test completed last year. Certainly didn't test what is probably the most prospective part of the area, but they have enough money that they can get back in there and do it this year. Okay, so very exciting. And I think that's one of these sleeper stories that could just pop up, say mid-year with some drilling news that maybe moves the market. Okay, so that's the scuttlebutt. That is the scuttlebutt. Now we're going to move on. Okay, now we're going to do updates. Now I only have a handful of updates. To be frank, there was probably more news that came out, but I am just like 24 hours out of Toronto, and the best I can do today is put together the most important updates, and the ones you're going to see here are them. Okay, so we're going to start with Tectonic. I think when Tectonic put their news out, and I think it was Monday that they put this out, I think I had probably 200 emails from people, retail investors, and anyone that's followed this story, just wondering what I thought of the results. And look, it's not that my views matter all that much, but I love to talk about this story and what I think they're onto. Okay, now let's kind of set the stage here, first of all, about what they're trying to chase. Okay, Tectonic is in Western Alaska. In fact, we met with the Doyon Corporation. We met with several members, had a long call with their CEO, Aaron, very supportive of Tectonic, delightful person to speak with about, supporting the company and seeing this project succeed. I also met with their geologist, Matthew, and we talked about this project. We talked about other assets they have. I mean, it was just exciting. It's nice to see interest coming back into this space, and I think Doyon is going to be. They're really in a good position because they have a lot of land that is prospective for minerals, including things like Tectonic, and I think they just have a good future ahead of them. But look, to focus on Tectonic, the company has had this flat project for a long time, okay, several years, probably 4 or 5 years at least now. And it's really only been in the last 2 years that they've done drilling there, okay. In 2023, the company came into the area in late season. They drilled a few holes. They hit, they did one deep hole, and it did hit a lot of gold. In fact, it clearly demonstrates the gold system persists to depth. What type of gold system is it? This is a reduced intrusive gold system. So it is one of those bowl of soup type deposits. Okay, we're talking about a very large intrusive body. In fact, multiple intrusive bodies that are all strung together, it appears. And these things have a large volume of gold mineralization, albeit low grade. Okay, now at least the area around Chicken Mountain was low grade. Now, they came back to drill in 2024, and the results are in this news release. Basically, this news release kind of captures the results that they had. And the headline hole is this one that you see here. Okay, now you say, well, okay, interesting. 65.5 meters, 1.2 gram, and there's higher grade. There's a 6.1 meters, and then there's even a 6 grams, and there's a higher grade interval of 21 grams. Okay, that's interesting. Okay, but I'm going to show you why it's not just interesting. It's really darn interesting. Okay, and it's because in these reduced intrusive systems, once you find grade, once you find that area with higher grades, you got to focus like a laser on it. Now, in 2023, they kind of went back to Chicken Mountain and drilled where there was historic drilling. In other words, they went back to the kind of zone of comfort. Okay, so before they went out and drilled in 2024, I met with them. Other people pushed them. Like the push was spread your wings, okay, across the property and test new areas. Okay, don't just focus on Chicken Mountain. Let's see what else is out there. Okay, they have a lot of targets. Let's see what else can be found. Okay, so they did. Okay, this is a bold step for the company. They went and they drilled new areas. Did all of them hit? No, but did this hit? Yes. Okay, this is a really interesting. Again, I'm going to show you in a 3D model here shortly why this drill hole is incredibly interesting. Okay, now before I go there, go to the next slide. Okay, now the company assayed 2 splits. They basically, it was an RC hole of all things. So they drilled RC, so drill cuttings, not core, but drill cuttings. And they assayed it once, and then they took another split. Basically, they took the drill cuttings, took another split, and you can see there's a difference in results. In the first go at this, they hit 5 meters of 1.2 grams. Man, my eyes are getting bad. And then in the next one, they had 65 meters of 2.13, and that's because there were some assays that came back that were higher, and that contributed to a higher overall grade. But it also shows us that this system is a bit nuggety, like there's some particulate gold in here that's causing a bit of a nugget effect, and that's to be expected. Okay, we know there's placer gold coming off of this area, And it's typical of these reduced intrusives, and it's actually typical to see kind of a bit of variability in here, but that just shows you the kind of, is it really that important at the end of the day? Not really. Okay. In fact, I see it as kind of encouraging, because it means usually when you get the nugget effect, your assays tend to underreport because of the nugget effect. And so when you go and build a mine, say in the distant future, you start mining and say, well, geez, there's a bit more gravity gold coming out of here than we thought. And it ends up being a happy story. But, that's all hypothetical at this point. But the point is, these guys have what I think is a new discovery hole. Okay. Very solid results. And by the way, this hole was mineralized to the bottom. It was a short RC hole. It was mineralized top to bottom with good solid grade, somewhere in that 1.2 to 2.1 gram range. That's kind of the range we're dealing with. Those now look like, say, valley type grades, like Snowline sees over at Valley. Very encouraging. Okay, go to the next slide. Now, this image shows the colored blobs at the top show the distribution of gold in soils. And then you can see the little colored specks. Those are the assays in the drill holes that have been drilled to date in the subsurface. And you can see there's at least a couple of deeper drill holes that they completed last year that also have gold down to great depth. But most of those holes are at Chicken Mountain, which is the big, broad, flat, mountain that we have here. Okay, where's this doggone hole that we just talked about? Okay, well, go way over to the left-hand side in the long section down below, and you'll see a place called Alpha Bowl. Alpha Bowl, okay? This drill hole is at Alpha Bowl. It's like a little pip of a hole that was poked in an area with basically no drilling, and I don't want to spoil it much further because I got a 3D model, and I'm going to show you why this is so darn exciting. Okay, but that's where it is. It's well away from Chicken Mountain, and I think given the fact we're seeing grades and some other factors, it's very exciting. Okay, go to the next slide. A little bit more technical background. Okay, so first of all, this is these are magnetic images, and they show the magnetic behavior of the rock in the subsurface. Basically, it's airborne magnetics. And those blue blobs that you see on the left-hand side, those blue blobs that you see, which are almost kind of like in a string, like a string of beads or something, blub, 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 like that. Those are reckoned to be the footprints of the reduced intrusives, which tend to have a low magnetic signature. That's interesting. Okay, now that golden apex area is kind of where, towards the south end of it, it's kind of where this, what do they call it? Alpha Bowl target is. Okay. Now, on that image, you can also see some little sinuous pink areas. Those are areas where alluvial gold mining occurred. And notice that Flat Creek area traditionally produced 650,000 ounces of alluvial gold. And also notice the next one up there, which I cannot read. Why not? Boy, it's tiny. Whatever. There's a 417,000 ounce that came out of the area off to the northeast there as well. So basically what I'm trying to say is that alluvial gold, the amount of production out of those two drainages is telling us, there's something more going on. Well, Chicken Mountain is to the south. Okay, so most of the drilling is in the area where, there was some gold, alluvial gold, but not the big alluvial gold. Okay, the big alluvial gold came out of Flat Creek and that other area, Otter Creek. I can now see it. Okay, Otter Creek. Those two areas are where the bulk of the gold came from in this district. Okay, that's interesting because it maybe suggests there's something up in that neighborhood. And I think these guys have now found it. Okay, so in the image on the right-hand side, it's simply a zoom in. Okay, you can see most of the drilling, all those pink and red polka dots are at Chicken Mountain, which is great. Okay, maybe that gold is generating Flat Creek. But the new drill hole is to the north of Chicken Mountain. I'll show you where it is in a minute with a 3D image. And I think it's more likely responsible for the gold in Flat Creek. And also potentially, there's a gold trend under golden apex that continues up to Otter Creek. And the reason there's so much alluvial gold is because that's where the mothership is. All right, go to the next slide. There's one more image here before I go to the 3D model. So this is basically looking obliquely at Alpha Bull. So that dashed line is highlighting where the drainage is for Flat Creek. And notice this is really important. Notice that the bulk of the gold anomalism at Chicken Mountain is actually outside of the bowl. In other words, it's on the south side of the slope, so going away from us in this image. That's where they've been drilling. That's the bulk of the work is over there. Not all of it, but a lot of it. Okay, it's over here in the Flat Creek area. It gets exciting, and it's this Alpha Bull area where they've done some, very distal drilling now, like testing new targets, and they've hit bigly. Okay, those results are from the area that's in the foreground, and is probably explaining why we have so much doggone alluvial gold in that area. So what I'm going to do is I'm going to go to screen share. Let's see here. Window, leapfrog viewer, share. Okay, hopefully now I have to open. Oh my goodness, I've been too lazy today. I didn't even open the doggone file yet. Where do we go? Check tectonic mountains. This might take a second, but we'll get there. Okay. Hopefully you can see this. I'm working on the assumption you can. It's a recorded video, so if you can't see it, I'm going to sound like a complete idiot. All right. So look, this is a pretty complicated presentation of different layers of data. We got the shaded topography in the background. We have the geology here. Chicken Mountain is where all these drill holes are, right in here. Okay. And good numbers. Okay, it's lower grade, but it's good numbers. There's a huge volume of rock that's mineralized there, and I don't want to diminish. There's a great deal of enthusiasm around that too. But I want to talk about this Alpha Bowl area, this stuff up here, because this is where they drilled what I think it could be a new discovery hole. Okay, so I'm going to turn that layer off. I'm going to turn this layer off too. Sorry, didn't have it fully prepared. Okay, we're going to look at this area. Okay, here we go. Chicken Mountain, lots of gold. Virtually every drill hole completed there has runs of gold. I mean, like every stinking hole has hit. Okay, and the deep holes they drilled last year, like this guy and this guy, demonstrate that gold goes down to depth. There's no question. This is a huge volume of rock. Most of the historic drilling, of course, is quite shallow, but now we know it's deep. Okay, but let's scooch over here. Now you can see right away, holy guacamole. With the colors, there's something changing over here. Okay, there's some high grade showing up. Yeah, there's some interesting information in these holes. These were drilled this year. You might say, well, geez, that's not bad. Look, there's a 3.85 grammer there and stuff. But it's this right here. Okay, focus like a laser. Okay, this is where we're going to take a look. All right, that hole is smoking hot. Okay, that the one that goes this way, yeah, it's okay, but that hole is smoking hot. This is out in the middle of nowhere, guys. The company did do its job. Okay, it came in here and drilled some new areas to back up and show you. See how that hole right there is right at the headwater of this alluvial area. Okay, that's the source for this. All right, and the fact they have coarse gold in that hole, no surprise, no duh. Okay, that's what's generating the alluvial gold field here. Okay, this alluvial gold field has 600 and some odd thousand ounces of gold. Where's it coming from? It's not coming from over here at Chicken Mountain. It's coming from right here. And this hole, which is really the first of what should be a zillion holes here, is telling us the source is in this neck of the woods. Okay, so what do I think? Okay, look, this hole from top to bottom is mineralized. It stopped in mineralization. Look at that right there. In fact, it was in pretty good grade right at the end. It was an RC hole. It's a short little pippy RC hole. Even these holes are not too bad. Okay, these holes have some good grades in them. I don't want to diminish, the fact that those have good grade. But what I think is likely happening here is that the gold deposit is basically immediately underneath the alluvial area. Okay, we go back to this. I'll zoom out a bit. You can see There's your gold target. Okay, I want to see this company here. I'm going to just get on my soapbox right now. I want to see this company get its proverbial poo in a pile and get after this thing, because that is a target worth fighting for. Okay, this is a discovery in my view. A lot of people read the news release and went, oh, whatever. No. Okay, that reminds me of the holes that Scott Berdahl drilled way back in 2021 at Valley, the ones that were just on the edge of that amazing discovery. Okay, so I think hole 26, this guy right here, is the edge of something much, much bigger. And if you look at the scale bar down here, they have a huge area to hide a big gold deposit right here. Of course, they have all this low grade too. Heck, who knows? Maybe they find a high grade pit here, like maybe the multi-million ounce thing is sitting right there in front of their nose. And they add on all this low grade over time. And we do find out that Tectonic is onto a mega, 10, 20 million ounce gold system. And this has an exquisite ending. Okay. All exploration dependent, but I'm telling you, this company needs to focus like a laser. They need to raise real money from real institutions, quit focusing on retail. I love retail, don't get me wrong. But quite frankly, these companies need funding and they need horsepower. Okay. So I think the company should wind its shares back. We're an investor. Okay. And I'm a big investor. I have a bunch of shares in this company. In spite of that, I'd love to see them wind things back on the back of a raise and support from a large pool of investors, institutional preferably. And quite frankly, Doyon and Crescat could be, the foundation for that. Say, for example, I can't go too far in the weeds with all that, so I'm going to shut my mouth now. But, we basically help see this story come to fruition, because this is a compelling exploration story which could lead to another discovery of a valley-type deposit that's really in an ideal location for developing such a mine. And now we have evidence. Okay, hole 26, in my view, is a discovery hole. It's going to lead to a much bigger discovery right in this general area. All right, I will shut up and go to the next story. Let's see. Okay, back to the deck. All right, go to the next slide, please. Snowline. They they saved a humdinger for PDAC release, 617.6 meters, 1.7 grams. I mean, holy guacamole, that's unbelievable. It's one of several 1,000+ gram meter holes that they've hit on the property. Talked to Scott after they came out with this news. Very excited. Is it a step out hole? No, it's an infill hole, and they had several other infill holes, also exciting, but it's also quite meaningful because it confirms, it basically confirms they have a shallow, high grade core that they can use as a starter pit. Okay, because look at that, 3.24 grams over 202 meters, basically starting in surface. All right, so this is exciting. It really bolsters the case for a starter pit here, a very high-grade starter pit. And it's also going to show that to any major mining company on earth that this is a tier 1 asset. It's a must-have in any league, any book out there. All right, go to the next slide. We're going to look at a few. We'll look at this plan view real quick, and then we'll look at a few cross-sections. I will take you to the 3D model as well. So we have several infill holes. You can see the darker ones here, the darker, little polka dots are the holes that were in this news release. The ones that are in pastel are the ones that were in previous news releases. But you can see right there in section A, we got hole, whatever it is, can't read it, hit a whopping 617.6 meters of 1.68 gram per ton with a very high grade up near the top. Okay. Nearby, though, you can see a big hole in section B and even down here in C. So let's look at the cross sections real quick. Go to the next slide. Okay, there's this. It's 119. Sorry, now I can see it. Okay, 119 is the big hole. You can see it goes way beyond the bottom of the pit. Okay, there's a lot of gold hanging out there. A lot of blocks are in the block model down there, which is interesting. So they actually recognize that. I think there's probably more to be added. If they were to do some more drilling about where the word granodiorite is, they could probably flesh out and probably pull a pit deeper. That's my guess. Don't know, but there's growth potential here. Okay, and that high grade near the top is just absolutely killer. I mean, your mind, the grade control geologist here will have the most boring job in the history of mankind, because every single day that trucks come out of this, they're going to be filled with pretty solid graded material, irregardless of what the geologist says. In other words, everything's ore. It's just cool as it can be. It's one of the most consistent ore bodies I've ever seen. Unbelievable. Let's go to the next slide. Here you can see hole 121. I think this is off to the northwest from that previous hole. Again, it catches a bit of a higher grade core there, but notice there's gold going down below the current pit bottom. Interesting again, more drilling might show, and maybe this is a future problem, I don't know, but I think more drilling might show that there's more rock to be mined at depth. Maybe the pit gets pulled deeper over time. Go to the next slide. And then section C here. This one's even more compelling. I think that gold at the bottom of this hole really does show that there's a lot of gold outside of the pit right now that is probably going to fall in a future pit. And, again, it's that growth. I think the resource was 7.3 million ounces that was published back in March or April of 2024. I think they're going to come out with a new number here soon. What it is, don't know. Maybe they add, 2-3 million ounces, something like that. Don't know. I think the confidence around the resource, in other words, the category, will shift upwards. What we should see a lot of measured and indicated this go around, but we should also see a sizable increase in the overall tons and gold contained in the system. All right, let's go to the 3D model real quick. Let's see here. Okay, now I gotta open up. Apologies, guys. I have to open up on desktop. Boom, boom, boom. Hold on, there it is. And we'll take a look at the model. Look, similar to what I showed you for tectonic, we're looking at the most recent drill data image out of the news release. It's been overlain onto topography, which is a shaded gray in the background. As I zoom in and out, by the way, the scale bar changes down here in the lower right-hand corner, so you can kind of keep track of things. But it's this is the drill data as presented from all the news releases over the past, 3 or 4 years now that they've been drilling. I'm going to turn the surface off so we can see what's going on. And you can see right away, look at the high-grade core to this thing. It is unbelievable how well that hangs together. It is one of the juiciest plums of an ore body I've seen in my career. It's consistent. The grades are consistent. It's not driven by little pops and whistles of high grade. It is solid intervals of solid grades over hundreds of meters. It's not driven by a meter or two of high grade here and there. This is a real deposit. I mean, this is amazing. Is it still open? Yeah, look down here. There's purple, and notice there's not any drilling underneath. I talked about this a few weeks ago, that if you do a vertical slices through this thing and kind of look at the grades, the highest grades that they found to date are in some of these deepest holes, even though they're one-off things. Like there's a 38 grammer there, there's a 14 grammer there. I think there's 100 and something grammer in one of these. But basically, there's probably some structural feeders down here in this region that are feeding the gold system up in this regime. Okay, so that's also a target. The other thing I really, really like about this is, let's see, you know what? I don't think that hole got included into this model. Apologies, but there's a drill hole that drilled out here that shows a pretty big whack of gold off, and it's not in this particular image. I'll talk to my guy and see if we can't get that added. Anyway, there's clear evidence this thing is going to grow. It's going to grow probably in that direction. Okay, you can see some high grade kind of protruding out in here, and it looks like it takes off like a wild hare and goes that way. All right, and that's towards the Gracie area. All right, so beautiful high grade discovery. We're going to see updated numbers soon. Let's see. Let's go back here. There I am. Bingo. Found myself. Go to the next slide. Goliath had so they had a very tough time with their assay lab. They did do photon assays and stuff, but there was just a giant lack of we'll call it focus at the lab. I don't know what's gone wrong with the world, but it took a while. But then once the lab got into motion, they got all their assays very quickly, because that's how photon assay works. It's very quick. And then everything just came in. Okay, so they put all their assays, all the remaining assays, everything out in one fell swoop in, I think it was right before PDAC. Maybe it was right the first day of PDAC. Can't remember. But it was sometime in the past week or two. And the headline hole out of this whole lot was 9.39 grams over 10.17 meters. Look, this project has returned an absolute incredible stream. And I, in this news release, even I look and I think, okay, well, that's a decent headline hole, but there's so many others that they could have put in there too. It's just that you can't put like 20 holes in the headline. So in my book, this is just one of many intervals. And if you look back at the history of Sherbet and this whole discovery, it was all about showing, it was those channel samples initially, several meters, 5-10 meter intervals of 10 gram per ton gold equivalent. And they're still seeing it in drill holes today. And people, I think, get a bit jaded. They're, another 10 meters of 10 gram gold equivalent. Well, okay, that's goofy. Okay, this thing has grown and grown and grown. And what really stands out about the story at this point is the level of detail they can draw the lodes. Okay, in the subsurface, see all those colored planar features down there, sheets, layers. They now can see the footprint of those things and see how they're distributed in the subsurface. And there's a huge extent to these things. Like the scale of this system is every bit the same size as other big systems around the world, like the Pogo deposit up in Alaska. So these results are right in line with what I would expect for a major, Pogo style intrusive related gold discovery. All right. And interestingly, they have actually found the intrusive to go with us. I did see some of the core. They had some of the core at their booth. And I got to see firsthand the core, the intrusive rock with the veins. And I'm telling you, man, I can absolutely guarantee that the veins that they have at Sherbet and Bonanza and all of those have the same mineralogy and same, general character as the veins I saw in those intrusive rocks. Okay. In other words, talk smoking gun. My gut is that the igneous rocks are probably tapping the same structural feeders, the same magnetic source for the metals. Basically, everything's driven by one big heat engine at depth. Okay, there's definitely a smoking gun component to this story. All right, go to the next slide. Okay, they've done a great job here of putting together two cross sections. One kind of goes northwest to southeast, so it's going more or less across or at right angles to the sheet-like things, but you can see the loads. Okay, they've now defined a whole stack of these things. And notice over there on the right, they did a lot of drilling over in that area. And you might say, well, why? Well, look at how it's coming close to surface there. I think this is amazing. Okay, most of their highest grade and biggest intervals, not all, but most of them, are actually hiding right there next to the side of the mountain. And they could put a ramp down and they could get to those very easily. Okay, so think about the original thesis in that respect. You say, well, you put a drive in and add it from the valley. Okay, the valley's on the right-hand side. Put a drive in, and then you can access these things from that drive up, like you're working up. You're not digging down, which is hard work. You're going up. That's amazing. Okay, so that whole thesis stays intact. And not only that, they're finding some of the best gold is in those veins that are closest to the side of the hill and to that area that they would access, first access with mining. That's pretty dang cool. Okay, go to the next slide. Now we're going to turn around and we're going to go to right angle. So this section goes from southwest to northeast, and it shows the layers. And you got two distinct orientations, like the Sherbet structure. Yeah, it's dipping about 45 degrees. You can see it's the yellow one coming down. And then you have the Bonanza structure and the more flat ones down there. Interesting stuff. the fact that they have enough data now that they're starting to put this together is wonderful news. They also now have enough data where they can say they know where the high grade areas are within these planar features. Look, no vein on this planet is uniformly mineralized across its entirety. Okay, that's goofy. Okay, all veins have shoots or pods or stuff, and it usually has to do with how the veins open up. If there's a dilationary zone, you get enough space where the fluids, when they come up, they can get in there and they can deposit all the goodies. Okay, they're starting to see a definition to those high grades. And again, a lot of that high grade is actually right there in front of our face. I mean, basically, it's just into the side of the hill. What better place for it? My gosh, there was like a 900 gram assay way back in the early days. Nobody could figure out where that was coming from. It was kind of in the talus. It was a chunk of rock in the talus on the side of the mountain. Now we know. Boom, there it is. Again, there's something really high grade. They need to drill the bedoodles out of this area that you see in the lower part of that baklava layer section. I think they're going to find something incredible next year. This year. Go to the next slide. Oops, sorry. This is, that's Treasure Mountain. Okay, they drilled at Treasure Island, which is up in the ice field. It's well north of Sherbet. So this different target, way to the north, but it's on the Gold Digger project. They had found copper gold surface samples here in 2023. Pretty good assays. Then they drilled a few holes. You can see where the red traces are. Look, they didn't hit any home runs. A lot of short intervals, 2-3 meter intervals of okay grade, but it's not what I call a discovery. Such is life. Okay, who cares? They got Sherbet, and that's where I hang my hat. That discovery is big. I'm going to show the 3D model real quick for Goliath here. Sure. Got to open up the file. Again, apologies. I should have had all of these opened up, but sometimes I get ahead of myself. All right, so this is going to take a second because I can tell you this is one big file. This is probably the biggest model of any of the drill stories that we've been following. It's absolutely huge, and part of that's because this topography layer is extraordinarily big, and that's what slows everything down. But here in a second, it'll pop up again. Note the scale bar down in the lower right. As I zoom in and out, that moves. And then we do have the gold equivalent values over here on the right-hand side. Okay, so we're going to zoom out for a second, and I'll tilt this puppy up. And you can see, all right, there's the series of veins that I just showed in their news release. Okay, it's kind of hidden below the topography here. But notice right in this area, this is where a lot of that high grade occurs. It is literally just into the side of the mountain, and it continues up into Sherbet. Don't get me wrong; there's plenty of gold up in the Sherbet, but there's so high grade, easy accessible gold hiding right there in plain sight. It's just crazy. All right, so let's turn that off so we can go faster. There's your plate of baklava. Okay, there's your gold bearing layers. Is it confusing, complicated? Yes. Okay, and have they got everything modeled? No. Okay, look at there. There's a big interval down there. What the heck is that? Well, that's one of those intrusive things. Okay, and I know that the company's working like mad right now to try to figure out the orientation and the geometry of those intrusive bodies that kind of cut up through here, because the intrusions, which kind of cut vertically across all this, are actually tapping the fluids from a source down at depth. But we know now that there's high grade. Look at, there's a high grade there. There's one there. There's one there. There's one there. Those intrusives are kind of the tree trunk, if you will. So we know there's something coming up from below, and then it's following these structures out and spreading out like branches on the tree. Very remarkable gold story. Is it early days? No, they're starting to get to a point where they can fully understand this thing, or more fully understand it. But does it still have lots to discover? Absolutely. Okay, look, there's a lot of drilling that has to happen in here to fully flesh out that high grade area. But even up depth into the Sherbet area here, this is a very nice continuous zone, very predictable. Okay, there's a lot of tons. Look at in there. Look, there's high grade. They haven't modeled it. Like it hasn't they haven't connected the dots in some of the stuff in here. Is there still more stuff to figure out? Absolutely. Look at there. There's a high grade right there. High grade, high grade, high grade. Are they connected to anything in the model? Not really. Okay. More modeling needed? Absolutely. Probably need to drill some more holes in there, start connecting the dots, but they're on the right track. Okay. My point is this is a work in progress, and it is an absolutely exquisite gold deposit that could make for a nice tier 1 asset. All right. I think there's one more slide. Let's go to the next one. I was so delighted to see this come out. This was sometime during PDAC, and somebody said, "Oh, Lion One just put their results out." Okay. I looked at these and I was very pleased, because what I'm seeing here is a story that is improving. You know, the production and the grades, all the metrics, every metric in here is improving over quarter, over quarter, over quarter. So I'm telling you, like, I can't promise anything. Nobody can. Okay. But if they get to 600 or 700 tons a day, which is what their goal is, this thing could make an exquisite operation that generates a lot of free cash flow. Are they there yet? Not quite, but they're getting pretty darn close. Maybe they are. I don't know. But this is a delight to see, and I'm really congratulate the team on such a good performance. I think this is fantastic. It's been a tough go, but they're getting there. All right, that's it for this week, guys. Appreciate everyone paying attention. Sorry, it's a tough, long slog, a lot of scuttlebutt to cover, but we got her done. Thanks.
All right, Quentin. All right, Quentin, thanks for that great update with all the scuttlebutt. Look, I was at PDAC too. I met with, I had probably 30 meetings, met with many of our CEOs and some of the technical people, just to reiterate some of the stories that Quentin talked about that I am most excited about after talking firsthand with our CEOs and geologists and Goliath. Oh my God. Goliath, I have a new appreciation for these intrusive dikes that they have just started re-assaying, and they have mapped. And this thing, it looks like a true freak of nature. Quentin called it a smoking gun. Well, that's these intrusive dikes that cut up right through, cut across, upward through the whole system. There's these layers of gold and silver that they have found have been created by these intrusive dikes, and the intrusive dikes are long and they are wide, and they are mineralized with like 10 grams per ton gold across an average of 50 meters wide. They need to drill these things aggressively. The intersection of that lower layer on the valley floor that Quentin was talking about, where they can just put an adit in. Wow, I mean, this thing has true tier 1 potential. Like Quentin just said, I'm extremely excited about Goliath. I'm extremely excited about Sitka, another big intrusive gold related system in the Yukon, like Snowline. I am really excited about Tectonic. Tectonic is a big, vast preserved system, as Quentin has always said, and now they have this new area that they have found with the high grade. That thing needs to be drilled aggressively, and it has such high recoveries. I'm really excited about Tectonic. I'm excited about Rakla. I'm excited about Snowline. I mean, look at Snowline. It was the darling of the whole show. Those are the gold names I'm most excited about. The silver names, Silver 47, like Quentin just said, they raised a ton of money. They're going to be drilling aggressively. There is a lot more silver, zinc, and lead in this VMS style system they have to be discovered. I think they're going to have a phenomenal drill season. Western Alaska, another silver story that's probably the highest grade silver resource among all of our companies. Again, I'm really excited about that one. El Oro on the silver side, and they've just hit a big 10 porphyry adjacent to their silver discovery. Like Quentin said, they need to do the infill drilling. to continue to prove out that this thing is another San Cristobal, which we absolutely believe it is, and that it will make a huge, very successful silver zinc lead mine with a 10 porphyry kicker that makes this thing, one of the biggest, most exciting potential mines in the world today, and highly economic. On the porphyry side of things, the copper gold porphyries, these are the really big systems. There are a bunch that we're invested in that are very exciting. Quentin talked about them today. BCM in Utah, Red Canyon in British Columbia, Alpha Exploration in Eritrea. These are three of the most exciting copper gold porphyry targets that companies that we have. These things need to be drilled, and we have several other copper gold porphyry stories that Quentin has talked about. Magotes is one of them, next to Filo in Argentina, and Altamira has a bunch of gold porphyry targets, another intrusive system that's exciting. Look, so many great stories, so many great updates that we had at PDAC, and I am really excited for precious metals investing today for the macro reasons that Tavi and I both talked about. I think we are in a new golden age for gold, and it's still early for the exploration stories. Eric Sprott gave a keynote speech at the conference, and the interviewer at Kitco asked him, Eric is a famous investor and ran a famous money management company in the gold space, and he's famous for investing in junior mining companies. And he said, who's the next Eric Sprott in terms of being an up-and-coming investor in the junior mining space? Who's going to carry the torch? Because Eric Sprott is just a family office now. He doesn't manage money for other people at this time. And he mentioned Crescat's name. Go to our website, and you'll see that the clip from Kitco. So even Crescat is starting to get some recognition in the mining investment community, and we're really excited about that. Thank you, Eric Sprott, for those kind words. If you're interested in getting invested in our strategies, we encourage you to reach out to Merrick. His contact information is on the screen now. This has been kind of a long one, so I'm going to wrap up. Thanks, everyone. We'll see you again in 2 weeks.